So, hello everyone on the crypto channel number one, where we're covering up all of the most resonant and greatest crypto news, where we're talking about Bitcoin, Ethereum, and other projects, about crypto exchanges, keep you updated. So, let's get started. Breaking: Bitmex will pay $100 million in penalties to FinCEN CFCCs. Former CEO Arthur Hayes and other executives at the firm are still likely to face charges on alleged violations of the Bank Secrecy Act. Crypto derivatives exchange Bitmex has agreed to pay up to $100 million to resolve a case from the United States Commodity Futures Trading Commission and the Financial Crimes Enforcement Network. In a Tuesday announcement, the Commodity Futures Trading Commission said the United States District Court for the Southern District of New York had entered a consent order for Global Trading Limited, 100X Holding Limited, as part of the settlement with both. Bitmex will pay a $100 million civil monetary penalty for illegally operation a cryptocurrency trading platform and anti-money laundering violations. In addition, the company will be required to hire an independent consultant to conduct a historical analysis of its transaction to determine if it failed to properly report suspicious activity. This case reinforces the expectation that the digital asset industry continues to touch a broader pool of market participants, takes seriously its responsibilities in the regulated financial industry, and its duties to develop and adhere to a culture of the compliance, said acting chair Rostin Beham. So, though the CFTC's announcement mentioned that the settlement stemmed from the case against former CEO Arthur Hayes and other executives at the firm, the individuals are still likely to face charges on alleged violations of the Bank Secrecy Act. According to a spokesperson for Bitmex co-founders Hayes, Bandela and Sam Reid were not parties to the CFTC and FinCEN settlement. Hayes has been free on a $10 million bail since surrendering to United States authorities in April, while the trial of some of the former executives is scheduled to begin in March 2022. Bitmex allowed customers to access its platform and conduct derivative trading without appropriate customer due diligence, collecting only an email address and failing to verify customer identity, said the Financial Crimes Enforcement Network. Despite Bitmex's public representation that its platform was not conducting business with United States persons, FinCEN found that Bitmex failed to implement appropriate policies, procedures, and internal controls to screen for customers that use a virtual private network to access the trading platform and circumvent Internet Protocol monitoring. According to FinCEN, Bitmex failed to maintain adequate anti-money laundering safeguards and reported 588 instances of suspicious activity to the government agency for more than 6 years. FinCEN alleged that the exchange conducted at least 209 million in transactions with known darknet markets or unregistered money services business providing mixing services. So it's really interesting. But what's more interesting is exchange listing and NFT boom lift IOTX, Rally and Axie Infinity price. So Bitcoin and altcoins are cooling off, but data from Cointelegraph Markets Pro shows IOTX RLI and AXS as the top 24-hour performers. So Tuesday started with bank after Poly Network was hacked for $610 million in funds in what appears to be the worst hack in the history of decentralized finance, and the price of Bitcoin dropped by 2% to trade near $45,000. Despite the severity of the hack, most altcoins are holding on to their recent gains, and those that are registered small losses line up with the pullback in Bitcoin price. So Coinbase listing boots IOTX for a second day. The decentralized Internet of Things platform was the top performer on the 24-hour chart for the second day in a row, since surreal sparked by an announcement from Coinbase that it will be listing to the token on Coinbase Pro beginning August 11. So I think it's pretty interesting. Let me know in the comment section below. Would you like more news like that, like this one? And what you like more? Coin analytics, analysis, or maybe news? So, infrastructure bill passes United States Senate without clarification on crypto. This legislation imposes a badly flawed and, in some cases, unworkable cryptocurrency tax reporting mandate that threatens future technological innovation, said Senator Toomey. The fight for lawmakers to clear up the language used to define brokers in crypto space may be moving to the United States House of Representatives soon after a failed attempt in the Senate. In a 69-30 vote, the Senate passed H.R. 3684 this morning, a bipartisan bill that proposed roughly $1 trillion in funding for roads, bridge, and major infrastructure projects. However, the bill also suggests implementing tighter rules on businesses handling cryptocurrencies and expanding reporting requirements for brokers, mandating that digital asset transactions worth more than $10,000 are reported to the IRS. Though initially split on the best course of action to amend the language in the bill, a group of 6 senators, Pat Toomey, Cynthia Loomis, Rob Portman, Mark Warner, Kirsten Sinema, and John Warden, proposed a compromise amendment on Monday. The amendment would have exempt software developers, transaction validators, and not operators as brokers, while suggesting that tax reporting requirements only applied to the intermediaries. Despite the lack of an amendment clarifying the crypto language in the bill, Portman, Warner, Cinema, and Boyden all voted in favor of the infrastructure deal, with only Loomis and Toomey voting nay. The Pennsylvania Senator Pat Toomey said the legislation was too expensive, too unpaid for, and too threatening to the innovative cryptocurrency economy. In his reasons for not voting in favor of the bill, the legislation imposes a badly flawed and, in some cases, unworkable cryptocurrency tax reporting mandate that threatens future technological innovation, said Toomey, following the bill passage in the Senate. After a single senator, Richard Shelby of Alabama, objected to the introduction of the compromise amendment to the infrastructure bill on Monday, it failed to be added to the legislation prior or to final vote. However, lawmakers in the House still have the opportunity to amend the language on crypto before a full vote in the chamber and the bill being signed into law by President Joe Biden. The bill likely won't be taken up in the House until later this year. Representatives and so chairs of the blockchain caucus, including Tom Emmer, Doreen Soto, Bill Foster, and Devin Schweikert, have sent a letter to all House members urging them to amend the forthcoming bill to clearly exempt non-custodial blockchain intermediaries and ensure that civil liberties are protected. So please let me know, as always, in your opinion in the comment section below. Let's discuss on it. Let me know what you interest in more, the news or the quant analysis. Also share with your friends. Also hit like, subscribe button. Thank you so much because it is so important. It's been worth for me. So it helped to develop the channel. And click on the next video which on your screens right now, because even more